The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. Markets off 2 points in the S&P cash. Volume is about 2.1 billion shares. This is options expiration. I am not looking for anything very exciting. It looks like for the last 2 days, they've been trying to figure out a way to get this market to go sideways into expiration. Options would suggest much higher. As I said on the show, I wasn't looking for much higher. In fact, I suspect that we are headed lower. But my time frames are not in the next 10 or 15 minutes. They are in the next 10 or 15 days. But options roll over Monday and Tuesday. So we're going to probably have a little bit of volatility intraday for those 2 days. And then we set up the run into the election and a few other things, but we'll get to them. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Again, not a lot happening out here today. It is options expiration for the most part. If they can get this thing to close out at 2140, it's probably a big victory for the options folks. We're looking at really, the prediction was about 2160. So within the normal distribution of a options expiration. Continue to see heavy shorting of some of these stocks like Netflix, and that just makes them go higher as each day they just open the stock higher and run the shorts just a little bit more. But that's a finite group of about maybe 10 to 15 stocks in the market, maybe 20 out of 7,000 that that trade on the major boards and do so with volume greater than 300,000 shares a day and more than stock price more than $5. So there are plenty of stocks out here. We have very few that are getting all the love and all the hate. And the ones that get all the hate get the bounce. But that isn't enough to drive an entire market. It's enough to drive a few markets as we look at them today. But I just know that we're going to have to sit on our hands. A lot of what the Fed wants to do is let the air out of this balloon very slowly. They've been successful so far. My guess is that they will lose control of it. The market's always bigger than everybody else. It may take longer to become bigger than everybody else, but it always does. Anyway, 2139 on the S&P cash. We saw a low of 2130. And I don't know if there's anything else you can say about it. The dollar still ends up being the number one thing to look at 98.77 for the dollar index. We're looking for that to go to 100, and at that time probably tell us a great deal more about what's happening just what else is going on. But I think the dollar is moving. It's pointing to me to a 100% chance that they raise rates in December. And of course, it's just going to be a quarter of a point. But at some point, they're going to have to put the brakes on. And my guess is that the first year of anybody as a new president will be a year in which interest rates only go higher. I imagine we could see 4 ticks higher or an entire percentage point in that first year of a new administration. Well, thank you. I needed to know that a threat had been detected. What else is going on out here before we get into the news? Well, I've got some major news. There's some pretty famous people out there that have a birthday today. The Prime Minister of Israel, Bibi Netanyahu. And guess what? One of our own tigers out here has a birthday. And that's Andy Heck. So I'll say hi to Andy Heck. Happy birthday, Andy. was talking to him earlier. He was working on some issues because he couldn't get to a website, and I was talking to him about how to get to the website. But a lot of people freaking out about the denial of service. Maybe we'll get into that today. But as always, we like to start the show off with a little bit of history.
That it's all just a little bit of history repeating.
It is history repeating on this day. In 1910, a massive explosion destroys the Los Angeles Times building in the city's downtown area, killing 21 and injuring many more. We always think that terrorism is something rather new in the world. It's been going on since people have been able to make bombs. The investigation led to the Bridge and Structural Iron Workers Union and their treasury, John McNamara. In April 2011, Burns, who was the Burns investigation, you don't hear much about them anymore. You knew about the Pinkertons. Burns was another big detective agency. Got a confession out of Ortiz Magnanal, who knows how to pronounce that name, who had been allegedly been the intermediary, and I can't even talk today, the intermediary, I'll be able to say that word by the end of the show, between McNamara and the two bomb experts. He personally arrested John McNamara, McNamara, and his brother in Indiana. Now, what's most interesting in this is that this was one of the first big cases for Clarence Darrow, the famous attorney. And guess what? Everybody was bribing everybody, and even Darrow got dragged in and was arrested and faced charges. A very good another attorney got him off, but there was a lot of blame to go around on this day in 1910, and there's very little new under the sun. But, everybody talks about everything as it's never happened before. But we've had bomb explosions at newspapers like we had today. We talked about the one in 1920 that blew up the New York Stock Exchange. It's been going on for at least 100 years. And there's nothing new pretty much under the sun, Mr. Horatio. Other things going on, if we look at polls elsewhere in the world, 6 months to go for the French to go and vote. To me, this is extremely important because guess what? If France decides to go with Miss Le Pen, who looks like she is going to win this thing by a hands-down deal, this could be the very end of the euro. The reason why is, of course, everybody's playing tough with Britain because they can all gang up with them. Of course, if France was willing to extricate themselves from the EU, that would be it. They can't afford one more. Right now, they're trying to persecute the British for leaving. But Le Pen has basically said that she would let it go. If the election was held today, most people think that she would win. It is 6 months off, but, the EU could very rapidly be a thing of the past. And everybody might just be looking to say, whoever's the last one out of the EU, flip the lights off. But looking very good for, Marine Le Pen, I think is her name. We'll be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
McCarthy pumps, they always soon while I the pipes to play. And Hennessy, Tennessee, toodles of food and the music is something grand. A credit to old Ireland is McNamara's band.
Yeah, I don't know how that fits in, but it was nice. Anyway, we've got Vale. Got a question from our email, and Pradeep asks, would love your thoughts on Vale. When you look at this, you've got to think that you are getting pretty much a sell signal today. So we'll have to, let's go back just a little bit farther out here. You had your last major high on April 21st, $6.26. What is that? 74 million shares on that April 21st high. We get into the high today. We are above it. We're going to come in right now. We got 29 million shares. So let's say you come up with 40 million shares or 42 million shares. That still puts you in and above the previous high with half the lighter volume. Also, if you look at my power law vector indicator, we'll take a little closer look here, is that the energy from that April 21st high to this June 1st low, and then the June 1st low back up to this high right now, the energy was off by about 22%, so, or maybe 25%, something like that. So this has not come back up off this $3.58 low with a lot of energy. You've had some big days out here, and kind of tough to actually say if anything else is going on other than that. But don't see a lot out here that doesn't say that you would probably be sitting on this. His question is for a long-term account. I just don't see anything that says out here until you get a test of the 100 level on the dollar index that the dollar isn't going to just keep going. So I don't know when he bought it or at what price, but any close below $6.26 is a big sell signal. So keep an eye on that. But we'll see how this thing finishes out the day. It is options expiration. You may want to give it just a little bit extra rope, especially if you're sitting on this thing in lower prices. Maybe volume comes in Monday or Tuesday. But as we sit here today, you're going to come in with half the volume of the April 25th high, and the energy coming off that low was not all that exciting. So to me, I would probably exit stage right. Let's see, what else do we have out here? A few more people asking questions. We'll try to get into them as soon as we can. We'll get into the movers just as quickly as we can. Of course, probably the big winner out here last night was Microsoft. I still got to get my winning horn out here. I haven't found a sound effect that really is good. I've found one with like a slot machine paying off, but I don't like that. It just didn't sound good enough. Anyway, Microsoft had blowout earnings and really surprised me. I was hoping this thing would come back into the $53 range so I could buy it. No, didn't get the chance. So you've got your second big gap away up here in this. And you know what? You've got a lot of gaps down below, too. The question is, what's going to happen with Microsoft? Can they keep what they have going on? I listened to and read the earnings transcript. Pretty interesting. At least what Microsoft is saying is two major things. One, that their cloud services Azure machine learning system is got a ton of people interested in it. It is not something really, it's something that they wrote, but it is not a proprietary system, i.e. they don't have some special thing that they wrote themselves for the machine learning. They're using everybody else's stuff that's been around, sitting around for a while. One of the most popular packages are, but they literally, everything that I've seen out there, they support. So whoever's flavor of machine learning seems to work on their system. They've got kind of it seems to me, rather rudimentary way of doing it so far. If you're brand new, there's no kind of standard Microsoft way of doing machine learning yet. But there's your system, basically works with just about everything. And this has been a big deal. And according to them, they have taken a huge amount of business from Salesforce. I saw earlier in the day, we saw the, well, let's just say who it is. It's Kramer.
Bring me the head of the false prophet, Jim Cramer.
Man, was he out defending this thing after they said anything about taking a lot of business from Salesforce. So I am somewhat nervous on Salesforce. But I don't know what else you can say about Microsoft. Everything that they've done since Baumers left has been pretty much on the nose. They haven't made a bunch of mistakes. They haven't bought a lot of companies that look like it's an incredibly bad idea. I kind of think maybe they paid a little bit much for LinkedIn, but you know what? Since interest is nothing, in a couple of years, that probably will seem like a small value if they can integrate that into what they're doing. It's very unclear. They didn't talk anything about their Slack killer at Microsoft, but I suspect that many people on Wall Street are already looking forward, and part of that is already in the stock price. If you're unfamiliar with Slack, we talked about it a few weeks ago. It's kind of the hottest thing in the from the Silicon Sultans is my new favorite term for the big men of Silicon Valley. Anyway, the Silicon Sultans out there all use Slack, which is kind of like email for groups and companies where you have to opt in. So someone just can't send you an email if you want to. You basically have to put them in a list of ones that people can send it to you, and it's all run on your own server or a Slack server too. But it's all encrypted. So hopefully end-to-end encryption. Anyway, on Slack. So very interesting. Anyway, Microsoft, huge blowout on earnings. Surprised me. I was thinking maybe earnings would come in just in line. I wasn't expecting them to whiff. But very interesting. everything just continues to look better and better since they got rid of Ballmer and they put in Satya Nadella. Anyway, you can email me at path@tfnn.com. You can call me at 877-927-6648 and put a message in the den if you have any other questions. What else do we have going on out here? 2140 on the S&P cash. So we're off 1 point on the S&P. No big deal. 2.2 billion shares. Is there anything else much to say about today's action? No, it's expiration day. A lot of people probably got a little bit excited when the market started moving down. I just didn't expect much in the way of up. And I'm not disappointed. Again, probably see a lot more action when we come in Monday and Tuesday. We're going to get options rollover that should take us into the end of the year through the election cycle. So look for some volatility Monday and Tuesday. The real direction of the market probably starting on Wednesday. So we may just have a little back and forth for a couple of days and then a true direction come Wednesday.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, Twilio was one of the bigger IPOs out. You knew the thing was going to eventually fall, gave a big signal. I hated this one because there were no shares to short back at $70.79. This hit August 15th, $66.40, went above it with just 6.7 million shares. So what? A little more than a fourth of the volume on September 28th. Sometimes it doesn't matter how much you know, they're still in a play. That was the case in Twilio and like Groupon. Groupon and what else? GoPro. All those stocks, everybody knew they were more than a little bit dubious. And Twilio, what do we know about this one? It has gapped down on about 5% on a secondary offering again today. Huge volume out here. Probably not a whole lot to say other than that on it. But one of the movers out here today. Other stocks, the one that gets the loser horn today is Skechers. They blame the calendar. I don't know how far that goes. Probably why this thing's getting hammered so horribly today. They're saying that the lead up to school just wasn't long enough. Somehow this year was shorter than last year. I mean, at worst, there's a leap day, right? So it's one day. Anyway, they're blaming the calendar. Wall Street not taking the dog ate my homework excuse and punishing the stock. It's down fairly significantly. What on a percentage basis, what do we have out here for Skechers? What is that? 16, 17%. But you know, tennis shoes, anything that kids have, kind of one of those things that's always in or out of favor. And Skechers, I think much more likely than the calendar, is one of these things that just isn't in favor anymore with kids. They'd rather probably tie iPhones to their feet and walk around on them. It seems the only thing that they're really interested in these days. But the big tennis shoe company going the way of the Crocs out here. And the next big low would take you to $15.92. That's back to the October 15th, 2014 low. Just 3.9 million shares. You got 21 million shares today already. I think that tells you just about everything you need to know about Skechers. I actually have a pair of them. They're fine tennis shoes, but I wouldn't have bought them unless they were 50% off. I don't understand the whole idea, but apparently they were a status item for kids. But hard to tell. One of the cancer drug delivery companies is out here ripping a new one. Hopefully you weren't short this thing. ALKS up on pretty significant volume of 12 million shares. And again, you've got this double gap that goes from about $52 to $60. It got to $59.39, $59.36. So far today. Not a lot of intraday action out here, but right back and filling this gap to the upside. You know, it's always heaven or hell out here. The Ponytail Boys on CNBC were buying massive amounts of $7 calls yesterday for Advanced Micro Devices, AMD. Doesn't look like that's going to pay off. They were sure that that was the hot thing to do. And you know what? Probably not a really bad bet, but I just looked to me like everybody was on one side of this already. Now, Advanced Micro Devices was on their deathbed when something very much changed. And what changed out here at $1.75? They started selling video cards, but quit selling video. Wasn't they quit? They really started to see a lot of people buying their video cards for machine learning. And why computer games has been a big part of it. Their chip business, their processor chip business is just nothing really to speak of. I would imagine it's less than 10% of everything they do now. But what happened in this big rise that we saw off the 175 low back here on January 20th up to $8 was all about everybody thinking that AMD was NVIDIA. And to a certain extent, it was. But you know, the new NVIDIA cards are out. In fact, I just ordered one today. And guess what? The NVIDIA cards are already on sale. I got, by using MasterCard, I think I got another $25 off of it. So that means that there's enough product to meet demand. And I don't know what else you can say about it other than that. Advanced Micro Devices looks to me like it would come down to this $5.66 level. It may not come down anytime in the near future back to that $1.75, but we're probably talking at least maybe some kind of trading range out here back down to the $5, which normally acts as a level of support because under $5 you can't short the stock anymore. But well, let's take a quick look at NVIDIA too. NVDA. What else is out here? NVIDIA. Anyway, we're looking at this. It kind of broke down a little bit. Not much juice coming back up here. Any close below a 3x3 displaced moving average, I suspect would set this up to move back down to $58. And I can't say that anything's changing in the very near future, but my guess is that a lot of these people have bought the cards to do machine learning and gaming on in the last year. That's getting awful close to saturation. So I think maybe this thing's overshot itself. My guess is long term, when this does fail, it will come back around to that $38 level, and that's where you would want to look at buying NVIDIA. BHP out here, there was something going on. Can't remember what. We'll avoid it. Again, on the losing horn out here was General Electric. They opened much lower, but got a little bit back here today, but guiding down, and of course not basically moving their earnings down for all of 2017 and into 2018. So I don't see any reason to buy General Electric unless you believe they're lying and they're sandbagging their earnings, which could be, but I think you have to make the case that they are basically sandbagging everybody with lower earnings. Same thing with Honeywell. You got basically the same kind of thing, but it doesn't really matter now. Everybody's in kind of this euphoric thing that they're looking for anything that drops a dime so that they can buy it. Honeywell up on a lighter volume, but almost a duplicate of GE's earning call. That is moving numbers down for 2017 and 2018. And I don't know. Is there anything else you can say about it other than that? Guiding down. Someone thinks that they've got to buy it no matter what. They're looking anywhere to shove their money. I can tell them where to put it, but that's just me. Back in a
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what else do we have going on out here? We've got a lot of earnings. We'll go through a few more of these. PayPal, nice little pop out here today. Now, this one is very interesting because it's going against the July 20th high of 2015 at $42.55. It's solidly through it, but that day had 52 million shares to the 28 million shares today. And if we go back a little farther, let's take a look at this. You know, this is a story that was really, I guess that's it, isn't it? Because this thing IPO'd back then. So it's gone through its highs since it split with eBay, but not a lot of volume out here. This has turned into kind of a product that isn't used in the United States near as much as it used to be, and much more by third world outfits, which is not a bad deal, but kind of changing its character to more of an international way of paying people than buying things on eBay anymore. Credit cards now the overwhelming way of paying for something on eBay, but a little different out here. And when we talk about beer, it makes me a jolly good fellow. Sam's Beer Company opened lower, pushed it higher. A lot of volume out here. We talked about this. It still has a higher volume low from September 21st with 500,000 shares. Today we got 740,000 shares. That still makes me think that this 145, 146 area needs to be tested on light volume again. I don't see anything in here yet that would have me be a buyer. The German company, tech company SAP, big in the cloud business, had a nice pop out here today. Of course, it's got a lot of gaps with an ADR. But nice move, got some decent volume up here. At this point, it's nothing more than a 50% retracement. Schlumberger had numbers out here this morning, and not good for it. Not a lot of volume yet comparatively to the last 3 days. So we'll see how the end of the day comes back in. But certainly a down day, certainly looking like 78.50 is where this wants to go, which is the gap of the 5th of October at a minimum. Let's take a closer look at this. You've got a couple of previous lows out here in the $74 range. This just looks to me like a stock that's in a bigger trading range from about $74 to $84. And my theory from looking at a lot of the stocks in this energy sector is that we just have this bigger trading range, and that trading range is probably now what, $52 to $38, somewhere in that range. And we're kind of at the very high end of it. Schlumberger already rolling over here today. STI, which is SunTrust Bank, came out with earnings. It popped down a little bit, some decent volume today, but nothing to write home about. Hasn't broken its uptrend as of yet. Let's get back to some other stocks. ACIA, which is coming back to fill its gap. Again, Monday, Tuesday going to be much more informative about what we have. This would be a buy candidate if it could get down to about 74 bucks on light volume. You gapped up on the 12th of August with 5.1 million shares. We're back into it with 1.4 million shares today, so not bad. And, you know, you did have a big gap down on, what is that, the 7th of October with 7.6 million shares. That means that any trade that you have, you know, that would be pretty interesting. Maybe 75 bucks up to that gap down at 102. So I'll be keeping an eye on that. If the market does have any indication that it's got anything left for us, I'm not on that bandwagon, but I'm more than willing to change my tune if anything happens to make this market look like it is doing any better. What else do we have out here? Some other ones that of note is Shutterfly. This one is coming back and filling its gap. This is another good example of all these double gaps getting retested either higher or lower. And on this one, you gapped up really on the 23rd of February with 1.66 million shares. Back into it with half the volume yesterday, which is pretty good. A little doji out here today. If you were rabidly bullish, you could probably get into this one at 42 bucks if it got there and put a stop at the very bottom of that gap, which ends up being 41 bucks. So not a bad one out here. Shutterfly, let's get the profile on it so I can tell you exactly. As we move along. Engages in manufacturing retail personalized products. The company operates through consumer and enterprise that offers a range of personalized photo-based products and services that enable consumers to upload, edit, enhance, organize, find, share, create, print, and preserve their memories. So basically, they sell photos. I guess you send stuff to them and they make photos. Yeah, whatever. Back to this level around 41 bucks. How many people actually print photos out anymore? It doesn't seem like a whole lot. Now, you did have this huge day down back on the 21st with monster volume of 5.2 million shares when this thing blew apart. But this is where, you know, you should be seeing support starting to get it because it did come down on such high volume. I'd want this thing to go sideways around this $42 level for a while and see some sign of accumulation. But this is pretty much where support should be coming in. Let's see if I got any more emails. Got a couple here we'll get to before the end of the day. Sorrel Auto Parts. Another one up here on very light volume as it hits 5 bucks. This one had a rip right off the August 25th low of 2 bucks to $4.85. Came back a little bit, went right back up to $5.05. So it's today going over that previous high, doing so on incredibly light volume, which is a pretty good indication on that one that if you were in it off the lows, then man, you got to pull the ripcord here and sell this thing. Fairly decent sell signal, and you know what? I didn't buy this one, but man, it's exactly what you look for. It is the standard Wyckoff pattern, which is you get a huge sign of strength, you come back and fill it with light volume, and then you get an ABC on the way back up. This one, though, is telling you that 5 bucks is pretty much it. Any close below $4.85 is a valid sell signal on this, and who in the world that didn't completely bat insane would be shorting a $5 stock? I have no idea. When we come back, what is this? Suncor Energy What else do we have to look at? We already looked at Vail. Maybe we'll look at a little bit more on Williams-Sonoma. I've been tracking this one for a while. And we'll get into this. Could be very interesting out here. Maybe this is more about buying new home. Maybe not. We'll talk about this and much more in the last segment of the Power Trip.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back here trying to beat out a bottom somewhere around this $46, $47 level on Williams-Sonoma. Nice lighter volume the last 3 days out here. I wonder if this thing is coming up on earnings. It seems like earnings date. Seems like it would be something that is, what's the earnings date on this? November 17th. So probably too close to get anything out of that. But I don't know if it's just all retail, but at best, these things are doing minorly better. At worst, they're blowing apart. This is one stock that couldn't afford a bad earnings cycle because, man, have you been building up power at this $46 level? Going back to January 20th, this thing for a year now has been beating around these $46 lows. So this could blow itself out in any kind of thing. Right now, the chart looks rather bullish, except it hadn't bounced. So I don't know if there's any much more I could say about it out here. Now, if you're a big fan of Yelp, which I am not, this thing has come back. This is a triple gapper. This gap around $32 and then at $34 has existed for a while. Let me just go back out here. These gaps go back to the July 27th of 2015. Then when we clean up on this thing here, it has filled its gap. I said that I've really never liked this business model in Yelp, mostly because they haven't had a good way of validating all the people that post their opinions of various places. And, of course, true to form, everybody abused this, and there's some famous cases that I've talked about before. If you're new to the show, they involve people like dry cleaners putting horrible reviews on their competitors. Same thing with plumbers. There have been a bunch of it. Of course, Yelp said that, you know what, we're not handing over the information on who posted those horrible posts. But the judges went to court. Judges say you had to. So what do you do to actually validate what users say? That's always been the weak link out here in Yelp. Most of this move back up to $43.30 to the October 5th high was a lot of hot air about them getting bought out. That has all but kind of evaporated, kind of like Twitter. I got a minute here. I haven't looked at Twitter. TWTR, right? This was another one that, the famous last words, it was going to get bought out. And more of anything than when I see these buyout stories that fizzle is who is behind them. And most of the time, since everybody on the Wall Street gets involved in these, I always have a suspicion that everybody is stuck in those stocks. And the only way to actually get out of them is run a short squeeze with some phony stories out there. Is politics full of more phony stories, or is the stock market? I'm having a hard time figuring that out right now. Thank God for WikiLeaks. The only thing I got to say. At least I know what's going on. If you take the time to read the leaks, what people actually say and what they actually do, pretty informative. Go back and think about that. That's exactly what happened in 2000 with Amazon when the guy said it was going to go to $1,000. Said that's a dog, don't buy it. In the email, kind of the same thing. Anyway, what do we have going on out here? Well, nothing much with Twitter. But you know what? Monday, a brand new week, brand new opportunities to make loads of cash on the Power Trading Hour. Sell when you can, not when you have to. We'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.